Great. So for those of you who are joining us for this session, welcome. I know crypto guys are partying all night and it's hard to wake up. So we're very happy to have you here. We're ready to start the next panel. So while the long crypto winter cools off retail interest, the institutional trading ecosystem is taking form. Veteran market participants will shed light on their role in promoting the institutional adoption, addressing key opportunities and main challenges. I would like to present Ilan Sterk, VP Trading at Orbs Group and VP BizDev at Alef Technologies, who will be moderating the panel. Please.
Hi all, and welcome to this morning's discussion. On the panel today, we'll focus on the institutional adoption of cryptocurrencies, use of exchanges and trading platforms compared to traditional markets, OTC role in the crypto space, and we will also talk a bit about regulations. For a long period, there has been speculation about when will the institutional investors start to invest in crypto. I think that the crucial moment was the announcement by Fidelity, which manages over $7 trillion in assets, that they set up a subsidiary called Fidelity Digital Assets, which will provide custodian services to digital assets for institutional investors, trading services in a number of markets, consulting services, and strategies in crypto. There is no doubt that the entry of a significant institution such as Fidelity to the crypto market constitute an important milestone for the advancement of the field. Libra blockchain, which will run the Libra coin, the Libra association with founder members like MasterCard, PayPal, Visa, eBay, and Uber, and also the Calibra, which is the digital wallet that will store the Libra currencies and will enable payment transaction, is another turning point that can lead to mass adoption of digital currencies in the future. I hope that we will have enough time for all these topics, so let's start. I invite the panelists. Rodford, founder and CEO of Archax, Dmitry Nazarov, CEO of Genesis Vision, Chung from Crypto Facilities, Marius Jansen, co-founder of Deribit, and Mariana, the CEO of Binance Europe. Hi, everybody. Please, if you can introduce yourself first, and then we can proceed with the questions.
Sure. So I'm Rodford, CEO, co-founder of Archax. We're setting up a digital securities exchange based out of London. Prior to that, I spent the last 20 years at hedge funds, most recently as COO of a fund called Omni Partners out of the UK, which managed $1.5 billion in traditional strategies.
Hi all, my name is Dmitry. I am CEO and co-founder of Genesis Vision, the decentralized asset management platform, which combines together investors and managers from different markets, not only crypto, forex and stocks as well, and operates in a decentralized manner.
Hi, I'm Chung. I'm the head of cryptocurrency pricing products for Crypto Facilities, otherwise known as Kraken Futures. So I manage all the index operations of our company. Previous to that, I was the managing director of Euromoney Indices.
I'm Marius Jansen. I'm a co-founder of Deribit. Deribit is a cryptocurrency futures and options exchange. We're live since 2016 and one of the only exchanges in the world that's has a decent options market in Bitcoin and Ethereum.
Hi everyone, my name is Mariana, Gospodinova, and I head the European operations of Binance, which is the largest cryptocurrency exchange by trading volume today.
So, Sui and Graham, both of you moved to the crypto market from the institutional side of the traditional market. What got you hooked on cryptos, and what was your aha moment?
So in 2013, our chief technical officer at the hedge fund came to me and said, I'm going to buy some Bitcoin. Do you want to get involved? And I'd heard a little bit about it. Hadn't really done much research at that point, and said, sure, it would be interesting. And I think, like everything, once you start getting involved in something, you pay a bit more attention. We had a macro fund in our office at the time. And we entered into these lengthy debates about what is money, what's the value of a digital currency, and I kept losing the argument. So you'd go back and you'd research and you'd come back a bit stronger the next time. But what helped us over time was obviously we were massively outperforming this macro fund, so the arguments became easier and easier. And then I think in 2017, when all the projects started to come along, you kind of noticed that it wasn't just esoteric investment. Actually, maybe something a bit bigger was happening here. So you started to look into the technology a bit more, understand what it could be used for. And then, I think two things happened that really interested us in 2017. So one was that it became obvious that there's a number of entrepreneurs out there, a number of people that wanted to start companies, and a good way of accessing capital markets was in digital currency offerings. And the second thing is that people wanted to invest in these projects as well. And when you started to look into the projects, you started to understand a bit more about the benefits of blockchain. So I guess the real aha moment for me was when at the hedge fund you realized that for my whole career I've been dealing with two major issues. One being whenever someone subscribes or redeems from a hedge fund, the portfolio manager has to rebalance their books. All of the people like to get out of hedge funds, but they have to give a number of notice. They're fairly illiquid. And actually, by being able to offer a tokenized feeder fund, you can correct a couple of those problems by allowing potential access to liquidity for investors, as well as a permanent source of capital for the hedge fund manager themselves. And the second major thing as well was realizing that most of the time spent in back office in hedge funds is spent reconciling, solving your portfolio issues, and those same issues exist at banks, at prime brokers, administrators, with everyone running their own separate sets of systems. And if you use a decentralized ledger in the correct way, you can actually just end up with one source of truth, and save a lot of the back office costs everywhere. And when you realize the impact that it has to banks, to market infrastructure, you kind of realize that actually this has the potential to change financial services.
Thank you. Sri?
My answer is much more basic. My aha moment was when I was offered a job. The growth of the industry, the many issues that the legacy financial world still faces today, will continue to face, tells you that lots of alternatives need to be found, and crypto is one of them for a fairly big chunk of the problems that the legacy financial world faces.
Okay. We see that the enterprises in the US are starting to accept Bitcoin as payment via apps like BitPay with AT&T and Flexa with Nordstrom, Whole Foods, and Starbucks. Marius and Dmitry, how do you think the beginning of adoption will impact the crypto markets? Do you believe any other enterprises will adopt crypto soon?
Excuse me, do I think if enterprises are going to adopt Bitcoin?
Yeah.
Well, I'm not specialized in that part, to be honest. What I think is that enterprises need to adopt Bitcoin anyway. They can't avoid it. But it's just a matter of time before they will do it, of course. What we see what I see in my space, especially, that like a lot of hedge funds are starting and entering the space, and I think it's a chicken egg story, right? Mm-hmm. And I think, well, I think the chicken is popping out of the egg now, so to say, and things are going pretty fast and going into the right direction as we're speaking now. Yeah.
Dmitry?
So yeah, I think that the process definitely has already started. And speaking not only about the Bitcoin, there are a lot of companies that are trying to introduce their own cryptocurrencies. The companies with the pretty standard business models, business operations, but they just want to utilize the crypto as the additional source of the transparency in the operations. So they are also like the next step in the mass adoption. Bitcoin definitely is the easiest and the shortest path because everybody knows about this. But a lot of companies, they're working on their own currencies and their own ways to step into this market.
Okay.
Ilan, just on that as well, what we're seeing is there are more vendors accepting Bitcoin and cryptocurrencies all the time, but it's not necessarily that they're massive proponents of Bitcoin, but they realize there's a lot of demand out there for people that want to use their Bitcoin. I mean, all that's really happening at the moment is at point of sale, they're exchanging those Bitcoin into fiat currencies because their whole businesses are based in that way. But that's probably the first step towards adoption. Over time, obviously, what Bitcoin evangelists will hope for is that people start getting paid in Bitcoin, that expenses start being paid in Bitcoin, and it can run through the system more fluently.
Thank you. So let's talk about exchanges. 2 weeks ago, crypto exchange Coinbase experienced a brief outage with both its website and its API was rendered temporarily inaccessible as the price of Bitcoin dropped more than $700 in the span of 15 minutes. One of the most important things for institutional is that they can trade in advanced trading platform. Mariana and Graham, on which aspects does your exchange focus, and how can better technology speed up market adoption?
Well, definitely technology is something that institutional investors are looking to ramp up a little bit in terms of exchanges and what they offer. And when it comes to Binance, we focus on a number of things. The first thing is obviously platform security and asset protection. I mean, nobody is secured against incidents. They happen. The bigger you are, the more likely it is that people are going to target you. But what you have to make sure is that you have a very decent recovery plan and that you really have an executional culture to fight whenever it comes, whenever disaster comes. And what we're trying to focus on is we have a really large force working on system maintenance and system improvements. We also have a very scalable platform, and currently our servers can handle up to 1.4 million transactions per second, and we have really scalable APIs as well, and these APIs support functions, not just the regular market orders, for example, or limit orders, but we also have different order types. We also focus on algorithmic trading, something that is kind of really known to the traditional financial world, but is still missing in a lot of exchanges. And clearly, asset protection, if you remember what happened in the incident, we actually returned all the funds to the owners. This is because we know how to protect the assets of people who trade on our exchange, because custody of funds is something that institutional traders are very concerned of. And last but not least, we also have regulated exchange arms, because regulation ramps up transparency and trust in the industry. So any institutional trader that comes to our Jersey exchange, for example, can trade with the exact same APIs and actually be having the exact same experience as on Binance.com, but on a regulated exchange.
Yeah, echoing a lot of those points, really. I guess, especially on the institutional side, what institutions and regulators are looking for are stable, robust systems. So we're applying to be a regulated security tokens market, so everything that we're doing is being tested by the FCA. But I think regardless of whether you're going for a regulated market or unregulated crypto, the same rules really need to apply if you want to attract institutions. So building up stable connectivity, API is up there, being able to cope with the demand. I think what's happened with crypto exchanges, which didn't really happen with traditional exchanges, is they've kind of replaced a lot of different counterparties in the ecosystem. So in the traditional world, the exchange would typically just be the matching venue, and then there'd be clearing houses, brokerages, execution management systems, as well as custody solutions as well. But obviously in this world, people like Binance, they're the front end, they're the execution system, they're your custodian, they're the trading venue. Not only that, but they're trading 24/7 and they're trading against retail. So you don't just have, a large number of institutions. You have thousands of retail clients hitting you 24 hours a day, 7 days a week. And really the traditional market infrastructure hasn't necessarily been built for that. There are a few examples out there of people with institutional infrastructure. Elmax in London, they have an institutional platform which has been used for FX, which they've moved into the crypto world now. But really, if you really want to attract institutional money, you just can't be closing down for any period of time.
Thank you. I would like to talk about my experience at Orbs and Alef bit. Sometimes we hedge our portfolio using crypto facilities, for example, or other exchanges that offer future assets. It is not easy to build a large position, and it can take a few hours. Sui, why don't many exchanges implement algorithms like TWAP, VWAP in their platform In addition, do crypto facilities use market maker and liquidity providers in their platform? If so, can you please share their role with us?
Sure. So obviously we continue to evolve and try and serve our customers, with the tools that they need to be able to execute, build positions, as you said, Ilan. There's obviously a very large set of wants from clients. So like any company, we try and prioritize and we try and build as quickly as we can, but they have to be robust. So because obviously we've seen incidents on other exchanges where some of these tools go wrong, and that causes havoc, quite frankly, with the market. And as an operator of a market, our first duty is to provide a fair and orderly market so that people can trust it, that they know that when they come, that they're engaging with a marketplace that shows integrity and shows order. So anything like a VWAP, TWAP, any more advanced forms of automated trading obviously need to be very rigorously tested against lots of different market conditions. So we aren't quite ready yet with some of those tools, but they'll be coming pretty soon.
Okay, thank you. When talking about institutionals, some of them prefer to trade on regulated exchanges. Dmitry and Mariana, can you share your thoughts on trading in an unregulated versus regulated exchanges? Considering one has more liquidity, but also more risk, and why?
Well, definitely there is a perception still that institutional traders prefer to trade on regulated exchanges for a few things. One is transparency and trust, and the other one is custody of assets. Then, of course, we can add market liquidity and technical trading, etc. But when it comes to regulated exchanges, the main advantage that such exchanges have is that they work hand in hand with regulators. For example, when we were seeking authorization in Jersey, we were working very closely with the Jersey Financial Services Commission and seeking their opinion and educating the Commission and the country about blockchain. This gives a lot of trust in the industry, and it definitely ramps up transparency when it comes to trading on regulated exchanges. Then another advantage that regulated exchanges have is better access to the traditional financial market, because investors would need on-ramps and off-ramps when it comes to fiat currencies. And definitely exchanges that are regulated have access to bank accounts, although it's still very difficult to secure banking partnerships. This is something that only the regulated exchanges can do. But on the other hand, unregulated exchanges have a much higher liquidity. They have bigger number of trading assets and pairs, and investors can diversify their portfolio, and they can hedge risks. And whether the world still prefers regulated or unregulated exchanges, I cannot say, because other parameters such as technical trading, APIs, order types that are available, and trading algorithms are not exactly a parameter of either regulated or unregulated exchanges. They can be found in both. So it's really up to the institutions to decide, I believe.
Thank you, Dmitry.
Well, obviously everybody chooses the way of the least resistance, and for institutionals, I believe that they are much more comfortable with trading in the environment where at least some legal framework exists and some protection. For retail clients, it is an obstacle when they, I want to trade my one Bitcoin. I don't want to provide my passport. I want this romantic anonymity, decentralization. For companies, it's not a big problem. So everybody got used to sharing the information. It's like business to business relationship. It's not a problem for them. That's why I think it's much more comfortable for institutions to go for institutional, for regulated exchanges, and the volumes they are coming from institutionals basically. I think that's they're much more lucrative for companies. Exchanges.
Marius, before the panel, we talked a little bit about regulated versus unregulated. Do you have something to add here?
Yeah, well, I think if you see the most volume is currently on unregulated exchanges. I think when exchange takes the path of going for regulation first, it's a big hurdle. It is also like there's a team, you cannot like focus on everything at the same time. Currently for Deribit, we are trying to avoid regulation. Eventually we will go for it, but first we want to focus on the technology and also talking about the adoption and also for what does Bitcoin need and the crypto space in general. I think options are very important, as well as block trade functionality. This is functionality where one party can create like a very special order in one block and can choose his counterparty. And this is something which is very interesting for institutions, because sometimes they cannot trade on an exchange because they don't know who the counterparty is. And by some legal issues, they cannot trade because of this. We are going to fix this with block trade functionality. They can choose the counterparty, and they can trade with perpetual contracts, futures, or options, and stuff like that. And I think this is really lacking currently in the crypto space. Basically, with all respect to everyone, the exchanges are relatively undeveloped if you compare it to the normal market, and I think we should all try our best to make it better and add more stuff like this so it's get more professional. Also, the technology of exchange is very important. Users have to be able to rely on orders when they put the order in. What happens if your exchange is regulated, but you put an order in, it doesn't get executed? Are you going to complain with the regulators? So I think we should just focus on technology. That is the most important thing right now. And this also, it's an interesting thing because exchanges are public. It's public data. Everyone can connect. The whole world can connect. And this is something new. And this didn't happen before. So there are some technology hurdles that need to be taken, and I think that is very important for development. And,
so I'll share another experience of mine. At Alef, we offer our traders who manage our funds to trade in two exchanges, Binance or OKX, as they offer sub-accounts. Institutions require this option of an exchange, but most exchanges are not there yet. Sui, when do you think we will start to use functionalities like what we see in trading platform in the traditional markets? And which of them do you think will be implemented soon?
So yeah, so that as you mentioned, for institutional asset managers who are managing different pools of capital, sub-accounts are a standard, both in exchange and OTC in traditional markets. It's a functionality that we offer, for instance, at Crypto Facilities, Kraken Futures, and these types of tools, this type of infrastructure is important to. I think you see it's becoming more and more important to the newer institutions in the crypto space, which we serve. I think in terms of as slightly echoing Marius's point, it's about the robustness of the technology. It's about the fair and orderly market that you offer. It's got to work. Whether it's regulated or not is really of secondary importance to most investors, be they individuals or institutional. However, what we're beginning to see is a slightly new breed of institutional investor. So for instance, in London, Prime Factor was issued not an AFMID license, but a full investment management license. So they now have the capacity, when people talk about crypto hedge funds, usually they either up to now have either A, had restrictions on who they can market to, who they can gather funds from, or B, the amount of capital that they can run. So, but now we're beginning to see a slightly different breed of institution who don't have those restrictions, and obviously their investors will expect a bit more. Their investors will expect, okay, what venues are you trading on? To Marius's point, we don't want to be involved in pools of undocumented capital. We need to know who our counterparties are, and that's where, as an FCA-regulated platform, this. As Marius said, it produces frictions, undoubtedly. However, I think that it does mean that we can serve those types of clients, those types of users, full service. It's not, this is a special zone. You come in the whole platform, every single product, exactly the same. place your orders, be executed, run positions, etc., etc., etc. And so, that's still a minority, of course, as Marius said. The majority of volume is predominantly on unregulated exchanges, but as this new wave comes in, again, very small, we hope. I'm sure we all hope that it will grow and add more depth to the market and drive professionalization.
Yeah. Thank you.
Ilan, sorry, just on Swee's point there, because it's a really critical point and one that's not talked about much. I think the definition of institutional changes in the crypto world. So in the traditional world, people think of it as pension funds, endowments, whereas in the crypto world, people think of it as anything that's not an individual, which kind of changes the bar. So when they say we've got institutions on our platform, quite often they're small-sized hedge funds, and they don't have the demand of the larger traditional asset managers. But what will happen is there's so many guys out there earning under $10 million, for example, and when they sit in front of an institutional investor and they have a proper operational due diligence placed upon them, they'll realize the questions that they get asked, what platform do you use, what controls are in place, they just won't be able to answer them if they're not trading on the correct platforms. So platforms will need sub-accounts, trading limits, segregation of duties for those hedge funds themselves to raise money. So it's important not only the exchanges develop, but also the users of those platforms approach the platforms, tell them the functionality they want and drive the products forwards.
Okay. May I also quickly comment on this matter, based on the experience of our company, because we really integrate multiple exchanges and brokerages from traditional markets as well, so we can compare the functionality, and we really need all these things like sub-accounts. Definitely there is a gap between the cryptocurrency functionality, crypto exchanges, and traditional like Forex with omnibus accounts, this margin trading, all this stuff. But exchanges, they're on the right track, I think. That's a good thing. But still, like adding the sub-accounts, but the margin trading is added only on the general accounts, not there. So still we are a bit behind, but I think that everything will change soon. So we are keeping up with the traditional markets which exist for a long time, and the functionality is required for institutionals. So crypto will be in this place soon, I believe.
Thank you. I want to talk about OTC trades. At Orbs, for example, we use exchanges but also OTC brokers, as the liquidity for large amounts can only be found at OTC brokers. Most of institutionals need OTC brokers. Mariana, Binance deals with OTC. Can you please describe the OTC mechanism for those who are not familiar with this type of trading? And maybe you can touch a little bit about the risk management.
Sure. Our OTC desk exists for nearly a year at the moment, and it complements the exchange entirely. So it's like the extended arm of Binance, and it leverages on the experience that we have and on the reputation that we have on the market. But at the same time, it provides investors who may not necessarily find the liquidity on exchanges to trade bigger blocks or bigger amounts. We have a very diversified portfolio of investors and we reach out globally. We have a team of 5 people who have extensive trading background, and they come from Merrill Lynch, Goldman Sachs, and other companies like that. And currently we have seen 31% growth month on month for Q1 on altcoin tradings. We are trading over 48 altcoins and Bitcoin over the OTC desk, and there is a 50% growth of volume overall in Q2. And when it comes to de-risking practices, I mean, it's not probably something that we can discuss openly in public, but what I can say is we deploy standard industry practices and we try to have a minimal impact on the market. Okay,
thank you. We are close to ending our panel. The industry was built first from retail first. It's still led by retail, but crypto exchanges are all evolving the asset class. And this is an ongoing process with perhaps years of work left. We see big financial institutions enter the space, such as Goldman Sachs and Fidelity. Graham and Marius, what are the major issues today preventing cryptocurrencies from becoming mainstream investment products? What pressing needs must be addressed before big money managers invest in digital assets?
I didn't hear the second part of the question.
What pressing needs must be addressed before big money managers invest in digital assets?
I think let's use it. Somehow some regulation will help to clear it up.
What about custodianship and?
Excuse me?
Custodianship.
Custody, of course, yeah, that can also help a lot. But what we see is that what I said, like the people, what we are running into is that people don't need to know the counterparty. What I experience is that parties are comfortable with trading on an unregulated exchange, as long as we keep up with the law, so to say. And I think it's just a matter of time before the whole crypto space develops. Also, Bitcoin itself has to develop, right? Currently, there is, with all respect, you cannot do that much with Bitcoin right now. It is a store of value, and you can transact. But I think we need to be able to do more with the blockchain technology. And then once this happens, then everyone's going to step in, and then, well,
okay, Graham?
the rest will be history.
I think education probably is the biggest part. Once you kind of get into this world, you've got to learn, what is blockchain, and suddenly you're presented with what are stablecoins, what's decentralized finance, what are different protocols, and now you need to start interpreting AML law, securities law, whatever it may be. So education is a huge part of it, and that will take some time. I think credible counterparties within the space as well. I think there's a lot of people playing regulatory arbitrage and taking the line of least resistance, which ultimately affects the perception of cryptocurrencies. So we've been speaking to a lot of banks about trading on our platform and potentially investing, and a lot of them have said to us, if you're focused on security tokens, it's fine, we can do that because they're regulated, it's clear what the parameters are, but if you're touching cryptocurrencies, we just can't trade with you just because of public perception. We love cryptocurrencies, but unfortunately that's just the way the market sees it at the moment. So I think improving the industry as a whole through regulation hopefully will change that perception a little bit. And then also just adoption, driving forwards decent use cases as well. So there's a lot of projects out there raising money, and there aren't that many cases of successful projects people talk about. In the ICO space, towards the end there, you had companies like Kodak and Telegram and bigger companies coming into the space, which is starting to get interesting before it tailed off. I think we'll start seeing similar in the security token space, and when you start people moving, that will help. But I also think it's closer than everyone thinks as well. If you look across the space, pretty much every bank we speak to has a head of global digital assets. Pretty much all of them are working on tokenization projects. London Stock Exchange in London has just done a partnership with 2030 and Navora to start tokenizing assets. Six Exchange in Switzerland are completely rebuilding all of their piping to be digital with SDX. Euronext have just bought a stake in Tokeny for tokenization of assets. So I think it's going to be sooner than everyone expects, but still a bit needs to change for it to happen.
So last question for all of you. When do you think we will see mass adoption of digital assets by institutionals? Anyone?
Whenever technology scales up and regulation is finally clear across all regions.
Okay.
Yeah, do you want to hear a year? Well, I think there's a lot of growth right now. It's really crazy. I think we can all experience that. And even when the bear market was, the price was really low, we could already see that. So I think if we keep on developing like this in the next couple of years, it should be able to happen soon. But it could take a couple of years, 3-4 years. Yeah.
Okay.
Yeah, I think the time frame is probably about right, 3 to 4 years. But also at the same time, I think we've got to remember that we talk about institutions, but all institutions are aggregations of forms of aggregation of the capital of individuals. At the end of the day, every pension plan has members, and those members are people. And so what I think we'll actually see is when individuals adopt cryptocurrency, and as that adoption grows, at some point there's an inflection point where just in their personal holdings it's no longer enough. Okay, I want my pension plan to include an allocation to digital, and fundamentally, pension fund trustees are only there to do the bidding of their members, and so I think that talking about institutional, retail, individual is a little bit of a red herring. Fundamentally, it's adoption, and when enough people adopt it, then everything that they're tied into will adopt it too.
Unfortunately, predictions doesn't work in crypto, so I don't want to speak about time frames, but I just want to mention one more obstacle for the institutional mass adoption. We mentioned already the technology gap, we mentioned the legal framework. Another thing is the business-to-business development side of this question. So as you mentioned, most top exchanges, they came from the retail market. Obviously, the crypto trading was the retailish thing until the recent times. So this B2B focus is missing. Some exchanges, they're introducing this, some exchanges doing better, much better in this regard, but it's still a bit difficult, more difficult than in traditional markets, to find the right contact, to find the right way, some specific conditions for the business needs. So this is a real obstacle for the business that want to utilize the cryptocurrency. They want to use liquidity, crypto exchanges, so they need some way of getting the business level relationship. So I think this is the question that needs some improvement.
Okay.
Yeah, I generally agree with the guys. I think the next 3 to 4 years you'll start seeing adoption on a pretty large scale. I think over the next 10 years, maybe not current issuances, but certainly every new issuance of public security will probably be on-chain. It just is so much more efficient for all market infrastructure participants that they'll end up driving it to change. So I think it will take a while, but we'll be quicker than everyone thinks. And someone's quote that I've completely stolen, but we quite like, is that the internet took 20 years to get to where it is today, but the internet didn't have the internet. And I think that's completely true of this space. And just building on what Marius was saying, is that innovation happens so fast in this area. The second anyone does everything, it's out there globally and everyone drives towards change, and the pace of change is rapid.
Mm-hmm. Thank you. Anyone has any question from the audience? We can take questions.
Hello, it's Tom Higgins from Goldeye. Question I've got is, my background is in the traditional futures exchanges like Alef, the International Petroleum Exchange. They seem to be very acquisitive at the moment. They have all the technology to run a full exchange, a full regulated exchange, all of the market control systems that you need, all the monitoring, all the distribution. Do you not think that they will start acquiring exchanges, and actually, rather than traditional exchanges now moving into this space and getting on the technology, they will actually just do it themselves?
Yeah, I can take that if you're okay. So we've spoken to a lot of the traditional exchanges, and you're absolutely right. But the couple of issues they have at the moment, a lot of their technology isn't built to operate 24/7, and they need the refresh period. So actually, it doesn't quite scale that way. They're all looking at it in interest, but they recognise that there's some shortfalls in their technology. So we spoke to a lot of the bigger guys, Nasdaq, Millennium, Sonova, and the feedback from most of them was that at the moment we're going to sell our technology and we're going to wait and see how this market develops. One of the things they've got going for them or against them, depending how you look at it, is they've got big successful businesses with a reputation to lose. So if LSE suddenly turn around tomorrow and said, right, we're going to tokenize everything and trade 24/7, it's going to affect their existing stakeholders. So they're taking a much more measured approach. But on our side, our matching engine is powered by Aquis. So Aquis in London's a regulated MTF already, capable of very high transactions, probably more that exist in the crypto world, as well as their market surveillance tools, to your point. So they're absolutely perfect for operating in a crypto environment if they can trade 24/7.
Well, as you know, we at Crypto Facilities are also an index provider. One of our clients is the CME Group. The CME's Bitcoin dollar future settles on our Bitcoin reference rate. So we have some, we have some knowledge of working with those traditional exchanges, and the CME contract is pretty successful. But do they have the resources and the expertise to enter the crypto space? Of course they do. They're big enough to enter any space. Whether they're ready to, whether it's their priority or not, versus basically taking over more and more of the OTC world, which is effectively what the traditional exchange world has been doing for the past 10 years. I can't speak to that.
Thank you.
Very interesting panel. I have a question on, in the US recently, the Financial Action Task Force announced that global crypto exchanges must now share data with each other. Do you think, like Deribit and Binance, are you working on this, and do you think this is doable and good for the industry?
Sorry, could you please repeat the first part of the question?
Yeah, the Financial Action Task Force in the US,
Right.
they announced they're gonna, that the global crypto exchange has to share data with each other called the travel rule.
Yeah, sure. So the FATF is a body that sets out guidelines. It's not really regulation that they issued. And then the countries, each country that is member to the FATF or to other parties of the FATF, like Moneyval, each country has to take these guidelines and transpose it into local legislation. So first, this is going to take years to start with. And second, I don't really think that even if it's transposed and each country adopts it, the travel rule is still going to look the way that it is right now. I do believe that the FATF is taking guidelines from big industry players and probably rules are going to change. And of course, if this is what the world wants and if this is what regulation mandates, I think every exchange at the end of it has to go by the rules because nobody's trying to be outside of the law. But I do think that there is a lot more education that we need to do to the FATF and other governing bodies to make those rules more applicable to the blockchain technology.
Okay, thank you.